Hi everybody, Ken Heinz here, HFR President with the September HFR 500 Performance Update. Very exciting month in the month of September. Probably, in my opinion, the most exciting month of the year because what we saw in September was not only an increase in overall levels of market volatility, but in a month where both the S&P and the bond market declined, you saw positive performance in the HFR 500. As you all know, there's many different ways to think about metrics of performance and really comparative performance analytics. Typically, hedge funds have positive exposure to both equity and fixed income markets. They're investing in stocks and bonds. They're investing long and short. Of course, they're also investing in commodities and currencies as well and many other things. But historically, if you look at the performance of the HFR 500, you have a beta to the S&P of about a third, somewhere around spot 35, and you have a correlation to the S&P of around 0.8, 0.85, somewhere in that range. So when you have a month where you see a 5% decline in the equity markets and the 10-year yield increased by 20 basis points, and you have a gain in the HFR 500, that's a pretty exciting month. So this slide really shows what I was talking about in the previous slide. Overall, in the month of September, you saw a gain of 24 basis points for the HFR 500. That's the composite, including all strategies. But that's a month where I show here the NASDAQ down 5.3%. If you look at different U.S. equity markets and even European markets, they were all down about the same. But what we saw was a gain of 1.17% for the HFRI macro and about 90 basis points for the HFR 500 relative value index. Event-driven was also positive, and equity hedge was only narrowly negative, outperforming the S&P 500 by around 500 basis points for the month anyway. So the takeaway I have to this slide are three, and they're very important. One, hedge funds made money long commodities in the month of September. We see that show up mostly in the macro index. Two, moderate, very hedged exposure to the fixed income declines that occurred in the month. You see that show up in the relative value arbitrage gain. And then third, strong stock selection, which really applies to both, really to all four strategies, mainly equity hedge and event driven. Strong stock selection and narrow hedged exposures helped those strategy areas withstand a lot of the declines which occurred in the broader markets. When we drill down one more level to look at the sub-strategies that drove performance in December, we see exact same themes that we talked about in the prior two slides. Leading area performance, the Investable HFR 500 Macro Commodity Index up almost 7% in the month of September. Secondly, you've got energy-based materials up 5.2%. You've got merger arb up 1.5%, and fixed income sovereign up 1.3%. That's really applicable to all. These are only the top four sub-strategy performance. Other RVA and macro strategies and most event-driven strategies were positive as well. Taking a slightly longer view of time and considering the results, not just September, from the full year, you see a lot of the same trends or sort of a combination of the trends which have driven performance in the first half of the year and in the third quarter, particularly the end of the third quarter when interest rate sensitivity and inflation became so important. But you see here, event-driven leading area up 12.5%. That actually tops the NASDAQ up a little more than 12%. 10% gain in the HFRI equity hedge, 9.5% gain for the overall investable 500 composite, and then strong gain from macro, 8.25%. And macro really didn't participate very much in the first half of the year when a lot of the performance was driven by risk on long equity beta. And then finally you have relative value up 6.5%. Obviously that was the leading area, or almost the leading area, kind of with the macro. And more importantly, that gain happened in a month where you saw a 20 basis point increase in 10-year yield. So that's very exciting. And looking forward, with people more interested in interest rate sensitivity and how to hedge exposure to rising rates, I think that's a very exciting data point. Finally, looking one level deeper and considering the full year or the first three quarters of the year to date so far, But looking at the sub-strategy drivers of performance, you see a lot of the same things that we talked about in the previous slides. Probably the quietest 30% gain that we've ever seen has been the HFRI Macro Commodity Index. It's almost up 31% in the first 3 quarters of the year. People don't talk a lot about this. Obviously, that was a big contributor in September, but it's really been a contributor for the whole year. So that's particularly exciting. Also, distressed restructuring gains over 19%. Energy-based materials, again, this has been a phenomenal area, not just in the first 3 quarters of this year, but even going back to last April. If you look at that, since the beginning of the quarantine, energy-based materials has been a dominant leader in terms of performance for the industry. And that was on the back of the huge sell-off, which happened right as the quarantine started. And then finally, event-driven multi-strategy, event-driven across the board has been good. You can see that up 15.5%. All of those well ahead of and outperforming the 12% gain, 12.1% gain of the NASDAQ composite. We have a lot of great information on the website about the HFR 500 and the benefits that the HFR 500 affords people that are using it as a benchmark, institutions that are using it globally as a benchmark. Obviously, if you're watching this video, you know we put out regular videos on YouTube about current performance topics relating to the HFR 500 and current market environment. Also visit our website, www.hfr.com. When you get there, you can see information on the HFRI 500 methodology, performance, but most importantly, we want you to go to the investor guidebook, which you can click on, you can download, you can print out. It's a very good piece that really lays out a lot of the important benefits that the HFR 500 has for institutions which are using it. And certainly, if you have questions, please feel free to reach out to me directly. Happy to arrange a call with yourself and talk about some of the benefits the HFR 500 has. Thanks, and we'll speak with you next month.